Welcome to the first Commodities Corner of the year. I'm Elaine Stenson, and today Will Adams from FastMarkets in London is joining me on the line to look at precious metals. Well, we can start with gold. Gold jumped on Thursday on physical buying after prices plunged to a 6-month low. But investors seemed to have remained enthusiastic because of a brighter global economic outlook and of speculation of an imminent end to the US monetary stimulus. How did you respond to this?
In all, last year was a surprise on the downside. I think many people were caught off guard by how far prices did fall, and the relentless redemptions we saw in exchange traded gold. I think the early talk of quantitative easing may be ending, sometime last year, and that first signs of that was we gleaned from the Fed minutes about a year ago. So I think that really was seen as a writing on the wall by some of the investors to start getting out of gold. I think it also signaled that the situation in the global economy was improving, and therefore the opportunity cost of holding gold after a long bull market was getting higher. And I think once you start to see equities and things going from strength to strength, money flowed out of bullion into equities. It's an interesting situation now, though, because I think although I can see that side of things and how the economy is looking better and how the end of QE or the tapering of QE starts to signal that, but I think you've also got still an awful lot of issues out there in the financial system, and you've got masses of debt, and I think we might have seen the end of that long bull run for the moment, but I wouldn't be surprised if we do see further gains in gold at some stage down the line because of all the uncertainty about how governments are going to tackle this debt. And the debt is, it's truly massive amounts of it. And will the governments end up having to inflate their way out of that, or will they debase currencies to reduce the impact of all that debt? So I think it's difficult to have an awful lot of faith in paper money or fiat money or government paper at the moment. You've got to ask, in longer term investors may well ask, will paper money and bonds and things keep their value? I think so. I still feel there is another time when gold will be used again as people try to diversify against that risk.
And while gold plunged 28% in 2013, ending a 12-year bull run, spot platinum was up 1.5%. It posted a 12% annual loss in 2013. But best performing palladium rose 1.3% and was the only precious metal to post a positive performance last year, up nearly 2%. What are you expecting in 2014?
Yeah, I think interesting on platinum, in that last year we did actually start to see a recovery. We saw a healthy auto market. Obviously, the platinum group metals are used in auto catalysts, so a strong market is good for platinum group metal demand. So it's surprising that that platinum did fall as much as it did, although the European market, where platinum is generally used the most in auto catalysts, was the weakest performing area. I think now that we're looking at a brighter future for the auto market generally, and hopefully some recovery in the European market, the platinum group metals should perform well. Especially the case as so much of mine supply comes from South Africa, and there is a potential for supply disruptions as strikes get up, as there might well be strikes in South Africa, and some of the unions are even talking about looking to strike or have strike votes looking to put strike votes to its members as early as January. So we could well see some supply disruptions in the PGMs, and I think that will underpin prices.
Okay, Will, as always, thank you for joining me on the line today, and that's all we have time for now, but we will of course be back with more commodities forecasts on Tuesday, so do tune in for that. Bye for now.